Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It is Friday the 13th, and we had the market close higher once again today. The S&P 500 gained 68 cents, or just about a 0.5%. And nothing's really changed here. We're in a bull market. The market rallies on light volume, but price is the only thing that pays, and that's what we're going to put most of our attention to. The market was lower, but it was a Friday, summer Friday, and I think that the best level of support right now is going to be about 154.25 or so. And then below that, of course, the area that I pointed out yesterday was 153.35, which was this resistance from earlier in the week that did act as intraday support yesterday. The market got extended yesterday, and today it got even further extended. So for those people who are looking at the market saying it's up too much, again, I say it's compared to what? Not compared to what the next person's willing to pay. So it doesn't make any sense to be early in a short sale if you're looking for some kind of top in this market. But I would say there's zero evidence of a top in this market, and to be looking for one is just doesn't make sense. Instead, you ought to be participating with the rallies and making money on the long side. I believe this is an all-time closing high, at least on a weekly basis as well. So the market continues to act very strong. Nothing's really changed there. We've got our areas where there ought to be support. Once again, that's 154.20, and then below that 153.30. I still think that the pattern I've been outlining for the last couple weeks, which is this inverted head and shoulders pattern. This pattern here, the neckline was broken yesterday, and we had that higher high. This suggests a move to 158. It doesn't mean just put in your sell order to sell your spiders at 158. You have to instead maintain some discipline about raising your stop and listening to the message of the market. The message of the market is the only thing that matters, and it speaks through price. It does have other ways of speaking to us, and those are volume, MACD, stochastics, moving averages, and that sort of thing. And again, the way that I use the moving averages are they're a good reference point, something to compare a trend to. That's it. They're not a trading system. Again, I'm going to save the cues for the end of the video because, as I pointed out yesterday, I get paid if you watch till the end of the video, and no one seems to be as interested in the IWM, but there are a lot of people who are interested in it, so I'm going to continue to talk about it, but they're not as interested in the IWM as they are in the semiconductors and the Qs. So let's take a look at the Russell 2000, because this one has been the leader over the last several years, and today we did get a new closing high. Now, it didn't take out this prior high here, so officially we don't have a breakout, but it is a closing high, and it's up near the top end of this range once again. So looking at a short-term time frame, though, it does look like it's broken out on this time frame, and even on the hourly time frame, you can see it is making those higher highs and these higher lows. So the IWM continues to act strong. No reason to think that it can't continue higher. This market's getting a little bit extended as well, but that doesn't pay the bills when it comes to selling short, overvalued, or overbought markets. I think support, the best support is probably near about 84.50 for the IWM. And then looking at the semiconductors, who've been the leader of this market lately, they were down today 9 cents. So maybe that's giving us an advanced warning for the rest of the market. We might be due for a little bit of consolidation next week. It wouldn't come as a surprise, just given how far we've run so quickly. But there's zero damage done to the trend. It's just one day's small bout of profit taking. I think that the best level of support is going to be near that 39.50. That's also where we see the rising 5-day moving average as well. Now we'll take a look at the Qs. The Nasdaq 100 also finished with another closing gain of 0.71%, which is surprising that they could do it without the semiconductors, which were down 0.22%. But we saw almost a 0.75% rally in the Qs. They were up 35 cents today, and just extending their gains and showing their relative strength further as we've had this rally, this small pullback to the rising 10-day moving average, and then continued rally. And the volume gets lighter in here once again. Again, worth noting, not worth trading on, though. It just simply means that perhaps the conviction isn't there, but amongst the buyers, but maybe that will come. So that'll do it for now. As I said on my blog, I'm going to have a video this weekend where I'm going to examine some stocks with big short positions in it. The number of short sellers out there still amazes me, especially in these individual stocks, and we'll take a look at some of those this weekend.